So here I'm going to give the mic over to Hollis, and we can look at his screen and the work he's done. And his is, and I'll let him speak for himself. Hollis is a little bit different in that he's not a day trader. He uses the majority of patterns and he trades with the majority of patterns, but on a 4 hour chart. So it's a little bit different what I'm doing, but it's the same trading plan, same concepts. So that's pretty cool. So here, let me give Hollis the mic.
There we go. Unmuted. All right. Can you hear me, Jay?
Yes, sir. There you go, Hollis. Everyone
All
else here,
right.
Hollis.
Yeah, and so if you ever take over the screen, just a little note to everybody, once you click over your screen, then you have to go up to the control panel and unmute yourself. So that's what took me several seconds there.
Wow, that's an impressive looking spreadsheet compared to mine.
It's nice that it's all done. Sometimes it drove me a little crazy going through all the details of it. Okay, well, I'll run through. This is my completed 2015 spreadsheet, and I've taken what Jay teaches us all with the method and put it down on the spreadsheet. I did a little bit longer term trading because I have a full-time job, so I can't do the day trading at all. So I'll pull up my trading plan. That might help a little bit. Biggest thing that I do is that I wait for a 200 pip move, impulse move before I draw a zone, and I came up with that mainly out of necessity because, of working a full-time job. I just couldn't draw the intraday signals. And then from that, I kind of crafted a few of my own little rules on here. If you want this, you can always you can go up on the GoToMeeting control panel. It has a little camera up there. It'll take a screenshot of that if you're interested in this.
Well, thank you, sir.
happy to share it. This is just my thing. I don't do anything different than what Jay does, so I don't go off the reservation or anything like that. But just like anybody's trading plan, you kind of craft it. Mainly mine's crafted to my lifestyle. That's all it is. So I miss, what it boils down to is I miss some of the trades that Jay does, but I don't trade it any differently. I'm looking for consecutive 2 out of 3 RTT levels, and I use all our same. You get in the same with a change of direction, trend line break, 5 and 5 cross, and I do just what Jay does on the 2%, or the splitting your trades into 2 trades. I use 2% of my volume of my account balance, and I split it in half. And then I think the one thing that I do, Jay, that and you got me on to doing this, is I adjust my volume for each trade instead of just doing 2 standard lots.
Right.
I risk an exact amount, and so now I'll run back to my spreadsheet. And I did this just because of what Jay said in one of his lessons. He said you have to know your number, and I don't know if you guys remember that. That was around, that was year before last, around November. And I found that to be so important for me, because what would happen to me is I would get on to a trade, and I would say, this one has a 30 pip stop, and I was like, woo, I'm ready to jump in with both feet. And the next one has a 65 pip stop, and I was hesitant, even though both of them should have been the same. So that lesson for me, you got to know your number, was incredibly important to
Your
me.
risk tolerance. You have to know how much you're going to risk, right?
So that you can sleep. You made that important point. And so I
Sleep is good.
realized, like, oh wow, so $500, that's really what I wanted to risk. And so if it was more than that, I got nervous. So what I did is, over here is my risk. I risk $500 per trade. And so I just adjust my volume, and I did a little spreadsheet here. So as soon as I type in my stop, if I have a 34 pip stop, my spreadsheet will spit out that my total volume will be 147, which I use FXCM trade station, so that'd be $147,000. I split it in half, so I'll do two market orders. And the reason I do, again, this is just for me, this is my little shorthand, because what you do on an FXCM trade station is you type in, if I type in 74, that gives you $74,000 because it's a margined account. So that's my volume, 74. So I have two $74,000 entries, which if they both, I'll show you here. So if they both stop out, like as in this one right here, trade number 12, at a 33 pip stop, if they both stop out right here, then I lose $250 on both of them, or lose. So my maximum loss, and again, this is all credited to Jay, and it really changed the way I thought about trading. My maximum loss is $500. What that did for me was I quit missing trades because I just said, hey, it's what I'm comfortable with. And really, Jay, if you remember, you and I kind of were getting together somewhere around in here in somewhere around September, October. We started with that long-term
Yeah,
trading
yeah.
thing,
That
and
helped me
and it
too.
really. I don't know if you remember. I was saying to you, it's just a trade. So we were talking about,
Well, I say
well,
that
it's
now too. Yeah.
yeah, and we're like, well, it's on a 30-day support, but there's not 2 out of 3 of the RTTs. So what do we do? And it's like, hey, it's just a trade. Yeah, it's got a bigger stop, but it's just a trade. You just adjust your volume. And so I think you can do that on basically any trade platform that you have. Um, I know OEC does. All of them do it. So you don't have to go in if you have a trade that's a method trade and it's 100 pips, and you normally trade one lot. You don't have to trade one full lot and risk $1,000 on that. Okay, so let's see here. So I covered the volume. That was a big one for me. Here is the volume. I did go in through now with my stops. After extensive testing, I realized that stops beyond 80 pips did not fit into my uh, into my trading plan. What ended up making it into my trading plan. So stops beyond 80 pips. So my maximum stop that I will take, and what that'll do. And Jay's shown it so many times, and he'll show a big spike move. When you see these big giant spike moves, it's just a lower percentile time to be in the market. And so, and I know you've covered that many times on the lessons, Jay. And so, again, this is just coming off of what you talk about, so much. So my maximum stop is 80 pips. And then I just do, and this is where I've just broken it down, and it really gives you some granularity to go back and look at your trades afterward. Just say and then I also do screenshots. So let me pick a winner here. I'll show off a
Pick a
good
winner.
winner
Yeah.
here. Yeah, I'll pick a winner to show you. Let me see if it'll come up. Okay, so then this is what I do for myself. Here is I just do a Word document and a screenshot of it. So this is this is my 24th trade of the year, and I'm showing this on a daily chart just to give a big view of it. And then I show here's a 4-hour chart,
Oh, nice.
and
There's the 5D.
I just show it and then I show my granularity for my own remembering because I take all my trades on the 1 hour. And Jay, I'll just give you some feedback. If I was doing it last year, I was keeping a spreadsheet on the 4 hour and the 1 hour. And the 4 hours great, but the thing that was happening to me is that by the time a 4 hour candle closed, the price had traveled so far that what was happening was my stop was bigger. So instead of getting
Beyond
a 20
pips.
or 30 pip stop, I had a 50 pip. And because I trade 500, 500 on yours, it wouldn't matter because you trade a standard lot. What I was finding is that the bigger the stop, the less volume I could trade. So after tons and tons of trades going through it, it was better for me, much better for me to trade on a 1 hour. I'll watch it on a 4 hour and a daily, but when it comes time to enter it, and that's where I put my stop and everything, then
yeah. Oh, let me ask a question. Let me pause. You still trade the 5 and 6 day pattern, the 10 and 12 day, and then the 30 day, 3 consecutive patterns, or do you ever eliminate those lower time frames? You just trade like a 12, 30, 60, or do you trade? Is there 4 time frames you key on?
Yeah, so I do all your time frames that you told us. And if you remember, this was back last year when we were calling it the 5 day. So this was a 5 day trade. But my parameters, the only thing that I do that's just different, and that's because of my my lifestyle, is that I wait until I have at least a 200 pip impulse move. So right here I mark my impulse. So the impulse move that I measure off of has to be at least 200 pips.
Oh, I see.
See, and there's my impulse move, which it just also happened to be, and this is another thing that I have found, that a lot of times that these will coincide, the larger impulse moves will coincide with those the 6 day and the 12 day. What I have marked here is the 5 day.
Oh, yeah, right. So the trend move, like it went down, the move that you're looking to retrace. So you need a 2/3 retracement of a 200 pip move.
Of a 200 pip move. Okay, and so that's really the only thing that I have added. I think that you're not in your regular lessons, and I just did that because of I just simply can't monitor the charts that much because I got a full-time business to run. But anyway, so here it is. So I just set my alert. Once I get a 200 pip impulse move, I set my alert for this level right here, and when my phone goes off, I pull up my computer or my phone or my tablet, and and then as you see, everything else is the same. It gave an entry right here at 108.06. The stop, I put 2 pips beyond the swing here. My first 1.4 limit was here, and let's see, and then I exit my second half, which is what you'll see right here. Now this is a 4 hour chart. I use the next highest time frame, exactly what you taught us,
to manage, yeah.
to exit my second half. So if you'll look right down here on the candle, when the MACD either goes flat or crosses, I exit on the close of that 4 hour candle. And so that was a nice one. It got in at 108.06, so it got 126 pips on that, on the second half of that trade. Now I'll go back to my spreadsheet so that'll make sense over here. You can see the first half of my trade got 37 ticks or pips. Second half got 126. Here's the money, the actual money that it made. And this is a big one. This is the percentage that it made. That the whole trade, when you add both of them up, was 7.84%, which is what I have found is that you never know, and I know you said this, preached to us so much. I could relay one thing is that you never know when the big breakout trade is coming. If we did, you'd already have your own private island. but we never know. So that's why you have to take every signal, and you have to do what Jay said. You have to leave something on the table to run. So you have to split your order into you have to split your trade into two orders so that you have potential. So you see, if I would have just had one on this particular one, I would have got 37 pips. But because I had something still on the table, half of it free trade at that point, I got 4 times the amount on the second one. Of course, I cherry picked a winner here to show everybody. Don't want to show a loser.
Well, that's all right. I mean, you can see what's your winning percentage there. I can kind of.
Okay, so the overall. So here I've got just a bunch of. I'm a let's see, a technical analysis geek, I'll say. So my win-loss percentage for my whole year was 73%, which is, that's an important number. But the most important number, and Jay, I'll give you all the credit for this, most important number is not what your win-loss percentage, because you can massage that. But the real number is how much did you make on your account. And so I made 77% on my account. And it all came from, I think it was 4 trades that ran, and you never know when they were. If you go back on a chart, I've tried to find it. You can't. You just don't know. But I had 4 big trades, and I'll show you.
Oh, how many trades total?
I had 26 trades, 7 losers, 19 winners. Yeah, that's right. But if you'll notice, if I went back and looked, if I tried to pick this out, I would never do it. But I had 2 trades, ironically the first trade of the year, which was so nice, and the 5th or the 6th trade of the year. My first trade of the year was 16%. My 6th one was 18%. You just never know when the big ones are going to come. And then everything else was singles and doubles, singles and doubles. But if you just took those 2 trades away, that's 30 some odd, whatever that is, 34%. That's half of my entire year of profit came in 2 trades. So anyway, I learned a lot in 2015 by keeping a spreadsheet, stuff that I would have never thought popped out to me. And the biggest thing that I was sharing with Jay here recently is that stuff that I thought I had already figured out. The numbers proved it out to be completely untrue by the end of the year. So that was really interesting.
That's awesome. Thank you so much.
So I'll give the screen back to you. I think I've done all that. And if you hear a 1-year-old in the background, South Carolina is getting snow. Jay, you'll get a kick of this.
Oh, that's great.
We're getting snow, and we know exactly how to handle snow here in South Carolina.
Yeah, I bet they do. Right?
We close down every building, and we take vacation. That's what we do.
I like that.
I'm trying to get the screen back to you here, Jay.
Oh, maybe I got to do it.
Oh, there we go. There it is. All right, there we go.
All right, thank you, Hollis.
All right. Appreciate the opportunity to share.
Oh, thank you.
I'm gonna turn my mic off now.
Okay, see ya. There's the little boy. Yeah, that was great. I love Hollis's mindset. Once you see his, while it's still fresh in your mind, you saw his spreadsheet. Here's my spreadsheet. That's nothing compared to. You saw the detail he had. That's amazing. So he takes it seriously. And the bottom line is It was 73%. That's fantastic. And every time you guys show a spreadsheet, it's like right in line with the work we're doing at that time. I remember 3 years ago, Fernando showed his spreadsheet, and he was like around 63%. And at that time, that's where I was too. So I love it that basically what you guys are showing is right in line with what we're doing. We've really cracked the 70%, which is huge from a trader's perspective. If you're winning that amount of that percentage of the time, boy, you're in good shape. But you see how it really takes diligence, and I love that Hollis is, he's self-employed. He's a businessman. He's got his business to run, so he's adapted the method for his needs. And the only difference he does is he needs a 200 pip impulse move to sell, and that's pretty cool. And that makes a lot of sense. And hey, show me the results, show me the money. So he has produced that. So from my perspective, I think you have to take that seriously. And I'm just glancing at right here what we have. What is the high there? 109.75, and the low is 107.80, right? So there's your there's pretty much 200 pips right there, right? So from your perspective, House, then you'd be interested in, you draw that retracement, and that's a good one for you, right? Well, maybe I know. Oh, he's saying yes in private. Here, I'll open that up so you guys can see what he's saying. There, you guys can all see that. So yeah, that's one he's interested in. So I like that. I'm going to keep an eye on that. And you had told me that in the past, and I thought that was good. But then I just went back to my own mad scientist laboratory and kept working on what I was working on. But now I'll have time to see that. So I'll mark that. That's Hollis's. Well, it'll show up in one of mine, in ours also. But that's pretty cool. Unnecessary applications. Well, that's the sign that I've got to exit my computer here. So we've just done about an hour, and I want to call it quits now while I can save all this stuff. Otherwise, the computer will start crashing on me. But yeah, great stuff. Please review yesterday's lesson I put out there, and today's also. And we'll be back again Monday and Tuesday. So I'm going to exit now before my computer crashes and I lose this recording. But hey, great seeing some names. Look, there's Randy. Haven't seen Tim. Also, Dr. Joe Gordy, my old buddy Gordy. I don't see you much in class anymore, so we got to catch up. But thank you, Hollis. Thank you, everybody, and we'll catch up with you guys Monday. Cheers, everybody.